Hi everyone, thanks for tuning in for the next conversation in our COVID-19 video series. Today we'll be discussing tax depreciations and insurance valuations, some of the services offered by the Acumentis Quantity Surveying team. I'm joined by our resident expert today, Gleeson, who alongside the Acumentis team provide our clients with quantity surveying services that include depreciation reports for residential, commercial and agribusiness, insurance replacement reports, asset portfolios and other QS related services. Zach, can we start with you sharing your key observations regarding depreciation since the COVID-19 pandemic commenced?
Yeah, thanks very much, Nathan. We're definitely seeing an increased inquiry rate for tax depreciation services, and that's across all property types since the commencement of the COVID-19 pandemic. This is partly due to government initiatives, which we'll discuss shortly, but as well as investors and their accountants being very diligent in ensuring they're increasing or topping up their cash flow in any way that they can. We're seeing investors, especially of commercial property, who haven't claimed depreciation before, but are now doing so to assist with the loss of income through reduced rents or vacated property as well.
Yeah, certainly makes a lot of sense. So I think we can agree that the government's been pretty proactive in what's been very challenging times, but I guess what are some of the specific initiatives that impact tax depreciation?
Yeah, so in its continued response, in especially assisting businesses navigate the challenges of COVID-19, there's been a direct change that affects tax depreciation. They've introduced key legislation that will provide increased returns to property owners through tax depreciation. So from the 12th of March 2020 until the 30th of June 2020, so it's about a 3.5 month period, the instant asset write-off for small businesses for plant and equipment, it's been increased from $30,000 to $150,000. So this means that any asset purchased for less than $150,000 during this period will be able to be claimed in full as a tax deduction during the 2019-20 financial year.
So what are these assets that are eligible for this discount then?
Yeah, so eligible assets include items of plant or equipment or machinery and specified intangible assets. So typically in property, that's assets such as air conditioning systems, window furnishings, floor coverings such as carpet and vinyl, kitchen appliances, but also can relate to office workstations, computer equipment, and similar. Yeah.
Okay, so based on that, what kind of properties do you think would benefit the most from these changes?
Yeah, look, so the legislation's particularly targeted towards businesses. So how property ties into that is any property that's held within an entity or any associated businesses with interest in a property, they're going to be likely the most affected and benefit from these changes. So places of businesses such as offices, retail and industrial, but also agricultural property and residential property as well, if it's held within an entity such as a holding company.
Okay, and is that instant asset write-off available to all businesses?
Look, it's not. It's available to all businesses turning over less than 500 million. So typically these immediate asset write-off thresholds were only available to businesses turning over less than 50 million. So they've actually increased that to 500 million. And there's also a second part to this as well. So the government's announced from the 12th of March 2020 all the way through to the 30th of June 2021, so the end of the next financial year, their backing business investment measure. So this provides a time-limited 15-month incentive to support businesses and increase economic activity and growth.
Okay, Zach, so maybe just get into the specifics a little bit and what are these sort of increased write-off measures? I mean, what are they specifically?
Yeah, sure. So these measures include a 50% tax deduction of the cost or opening adjustable value of an eligible asset on installation. So any existing depreciation rules then apply after that time limit's over. So if an asset has a 10-year effective life, so instead of claiming a 10% deduction over 10 years, you'll actually be able to claim a 50% deduction in the first year for that increased tax saving. The government's also tweaked the simplified depreciation rules available to small businesses for this same 15-month period. So if a business is using the simplified depreciation rules, so the simplified depreciation rules are where businesses can pool or purchase assets which cost greater than the immediate write-off threshold and claim it at a 15% deduction in the first year and 30% deduction year after year, no matter what their effective life or what they should, how long the asset should last for. With the changes the government's made, they can actually claim 57.5% of the cost in the first year, up from the 15%. And then the balance is then added back into the small business pool to continue depreciating after that time. So all these measures are available to businesses turning over less than 500 million.
Yeah, obviously, so that's a benefit to a lot of businesses out there. So look, I think you touched on it earlier, but how are you seeing the volume of inquiry, I should say, in relation to tax depreciation now?
Yeah, so we're definitely gearing up for a very high inquiry rate, leading into this tax season, which we're starting to feel now, but also for the 2020-2021 end of financial year as well. And that's due to the increased deductions available to businesses, but also many property investors just looking for any way to save money, whether that be due to decrease in rental or lease income they're receiving or losing their jobs themselves. Tax depreciation is a really effective way to save money by maximising your tax return.
Yeah, so look, I think on the back of that, I think investors and business owners should certainly look at what they can do to basically, maximise their returns in that regard. So Zach, maybe changing tact a little bit now. So in relation to insurance valuations and the importance of adequate and current insurance, what are you sort of seeing during the pandemic in relation to insurance?
Yeah, sure. So I don't think, for commercial agribusiness, body corporate or strata properties, I don't think it's ever been more important to know that you're appropriately covered in light of an insurable event. The fact is, which a lot of people aren't aware of, is that in the event of an insurable event, such as fire, insurers only pay out the portion of the claim that you're actually covered for. So insurers engage experts like ourselves in the event of damage to make sure that the insured were correctly covered. If not, they only pay out the percentage that they were deemed actually covered for. So with a decrease in economic activity, I don't know anyone that would want to be at risk to have to fork out hundreds of thousands of dollars potentially to rebuild their livelihood or business. Not many have that kind of equity or extra dollars floating around, and especially during this current time. And as an example, we only last week worked on a large industrial property affected by fire, which was deemed only 54% adequately insured. So this means that they're now having to fork out 46% of a $1 million plus repair bill. So they'd never had an insurance valuation done before by an expert, and they'd gone off their own thoughts in regards to what their improvements were worth in the construction market. It's extremely unfortunate, but for a business which is already feeling the pinch during this current climate, ensuring your property is appropriately insured is absolutely paramount.
Yeah, and I guess, look, we're seeing obviously the world just change so rapidly over this period. I mean, what sort of impact is it having on construction prices and costs?
Yeah, really interesting question there, Nathan, because it's a very hot topic at the moment, and especially in our profession as construction cost experts. And has there been noticeable changes in construction prices? Not yet. Last quarter showed a 1% increase across the country. This was up from 0.9% the last quarter in 2019. We do, however, think it could be very volatile over the next 6 to 12 months. What's causing this volatility? Well, CoreLogic suggested due to the increase in availability of labour, it'll most likely be a deflationary trend in construction prices in the aftermath of COVID-19. However, particular materials and trades will be affected and show an inflationary trend. We're already starting to hear of increases in costs directly related to steel, and that's predominantly due to the lack of import. This will especially affect industrial projects or projects with large steel framework and members.
Yeah, so obviously it's getting probably more and more complex. So very important to get the right advice, I think, in relation to your insurance assessment. So, in relation to other factors that you think might arise from the health crisis in the future.
Yes, I suppose future markets relating to insurance as well as tax, due to the volatility of the construction market, we're sure property owners will put more emphasis on being appropriately insured. Definitely foresee increased media attention towards this. There's going to be some horror stories, unfortunately, and we're expecting a high inquiry rate in regards to this over the next 12 months due to those factors. And from a tax point of view, due to the increase in tax savings available to businesses over the next 3 and also that extra lot for the 15-month period, we'd expect those who can will be refurbishing their workspaces or upgrading assets and machinery and improvements where they possibly can with those tax savings. And this, of course, being the point of the stimulus and also great for our overall economy.
Great. Well, thanks for sharing your valuable insights around the changes and importance of tax depreciation and insurance valuations around these challenging times. It's clear to see there's still some great opportunities for properties and businesses to make the most out of their tax returns and also to ensure their assets are appropriately covered. If anyone needs assistance with quantity surveying services, please contact our team at Acumentis. You can reach us on 1300 882 431. Thanks for watching and keep a lookout for our next conversation that will be coming very soon.